At the currencies market, the Naira weakened against the US dollar on demand pressure. Adetobi Sholanke, analyst, Treasury and Trading Group at Associated Discount House, joins me now for an update on the fixed income and money market. Thank you so much, Toby, for being here.
Thank you.
Well, let's start with the Naira. It appears the Naira has stabilized at around 160 Naira. I've seen it going back and forth, but not breaching 162. Is this a direct result of perhaps consistent flow of forex from foreign portfolio investors, or the CBN's new retail Dutch auction system?
Well, thank you. I think that what we have seen going on in the forex market has been as a result of the inflows that came in last week from NNPC and Chevron. And that inflow, it was quite a large amount. Since then, we haven't seen any inflows. And so this should explain why we haven't seen a slide to the levels that we've seen in the past. Now, since last week, we've only seen about 20 to 40 kobo depreciation in a day's market compared to the 1 Naira that we've been seeing. So I would say that it's due to the inflow that we saw before. We haven't seen any other inflows, and that should explain what has happened since then.
Do you think, can we just heave a sigh of relief and just relax now? Because looking at what the CBN has been selling, it hasn't breached 300, at least in the last 2-3 sessions. It's all been under 300, although we saw very 900 and 290 something, close to 300, but all still under 300. And then we have from NNPC, we have perhaps from the local units of the multinational oil companies and foreign inflows. So all the factors that all the supporting factors that the Naira needs to stay stable, are they all in place for now?
They are. I would say that the reason it hasn't gone to 300 recently is because of the change from WDAS to RDAS. The RDAS is more scrutinized. It is a more accountable way to see who's actually participating at those auctions. We get to see more transparency on the part of the auction. And so that basically just shows that what we see is actually showing a true state of things in the economy, which is more stable, making Nigeria look like the Naira look like a more stable currency.
So the retail Dutch auction system is the best thing that has happened to the forex market in recent times. You ought to have introduced it now, well, way before now.
I would say it's a good change for
because we had the system before we went to the WDAS.
Yes, we did. Yes, we did. But I would say it's a very good change at the moment. In fact, I think that circular came in at just the right time when we saw that the Naira was just really volatile. And it was a fantastic change for us. Well,
let's talk about the CRR credit on Wednesday and its effect in comparison to the previous debits that we've seen. Well,
the market players in the Naira market were not sure what to expect. We knew that on a certain date, CRR was going to be adjusted for, and we weren't sure whether it was going to be a credit or a debit. Now, players started quoting 18%, from where it closed at 13 the day before, and that was was just a sign that things have changed from the initial debits that we saw before. In fact, before we saw rates skyrocketing to about 30%, as you know, and so 18% is actually we would say that things have moderated on that front, and so the credit. In fact, we actually saw a credit, and once the credit came in, players started quoting 13%, which showed that there's more confidence in the system, and that there's now more liquidity as a result of that.
Okay, let's the T-bill auctions results, trends, and implications. Anything different from what we've seen in the market?
I would say that rates are now dropping. Subscription is dropping. The volume on offer on the long end has actually increased from the calendar that we have seen. We had at the last auction we had 20 billion on the 91 days. The rate of subscription was about 1.2, well, 120%, 20% oversubscribed. And non-competitive bidders came into the market and took up a very large chunk of that. They took about 6 billion of the 20 that was on auction for the 91 days. And then going to the longer end for the 364 days, we saw that even though 68 billion was on offer, we had 90% oversubscription.
So there's still healthy demand, appetite for the treasury.
I'm going to that. Okay. The non-competitive bidders took 51% of that. Okay. So I would say that what we actually saw was players actually coming to the market to take in long tenor bills, but the non-competitive bidders won most of it. So even if there was a lot of demand, healthy demand on that end, I wouldn't say that it was allocated in a manner that would reflect the true state of things that are going on, because that bill is not going to be tradable now. From what we have seen, it's about 34 or so is with non-competitive bidders. We need 50 billion for it to trade, and so
okay, interesting. Well, let's go over now to the fixed income market. Bond auction circular for the auction next Friday. What are market expectations in terms of yields?
In terms of yields, yesterday in the market we saw buying, which is unusual for the winding down of the week. Ordinarily, Thursday, Friday, you'd see selling because people are trying to take in their income for the week based on their strategies. But instead, we actually saw buying, and this we would attribute to the fact that there are public holidays next week in Nigeria. And for that reason, people just basically wanted to play in the market, taking their positions, state of liquidity. You know, they just wanted to put in their funds into assets for the time being up until after the public holiday, which would be Thursday. And then by Thursday, we would see where the market would be. There's going to be a bit of selling down, definitely. The 20 years that is on auction closed at 13.06. And at 13.06, I would say that it's really close to where it was at the last auction. But on projection for the next auction, I would definitely foresee that wherever it closes on Thursday, and the last auction, the midpoint of that would definitely be a good place to project that the stop rates would be at.
Now, but at the secondary market, are we going to see demand still high, that we'll see yields coming down somewhere around 12%? We've been talking about that, seeing it coming down to 12%, but that hasn't happened. It hasn't got to 14% either, so it's just stuck at that 13% band.
Well, first of all, I'd say that 13% is very attractive, which is why we've seen a lull in activities on the short tenor, being the treasury bills. And now, to say that in the market there might be some demand and it might not get to 12% is actually far-fetched. The reason I say this is because we have two sides. We have those who want to come in and take their profit, and we have those who want to buy. Okay. So the moment it shifts to below, say, to below 13%, we have the people that are going to come in and sell, taking their profit. Once it goes above, we have people that are going to come and buy and take it back.
So that balance always happens.
That balance always happens in these times, yes.
Okay, well, thank you so much, Toby, for sharing your thoughts with us, giving us more perspective on the fixed income and money markets.